Hello, good morning, everyone, and welcome to the last morning session of the 2 weeks live trading session. And because we didn't meet last night, we'll just round up from yesterday's trade and we'll look ahead to the markets today. So just do a quick roundup from yesterday and go ahead to today. So yesterday, I've actually drawn the white lines there. Actually, let me just put the text there, make it easier. We had a textbook trade yesterday. Let me just put that there. So that was entry point. And that was 30 pips. Obviously, the pivot point lines have changed from yesterday. Obviously, they changed at midnight, so that's why the pivot point levels are different. So that's why I'm just drawing the white lines to show what happened yesterday. Almost done. Okay. Actually, we could complete the whole thing by putting a stop loss there. We'll just be completely thorough. Try and do this quickly. Okay, right. So quickly, yesterday, our entry point was there at that level. You can see where the market took us into the trade. So that was our entry point with a 20 pips stop loss and 60 pips profit limit. As you can see, the market was trending sideways when it took our trade. But if you see, it did not get to the stop loss and then went up, got to the 30 pips mark. I think at that point I sent you all out an email about moving your stop to the opening level, which I did. Moved the stop to the opening level, got close to the 60 pips, came back down, went sideways, and you can see where it just crashed through the 60 pips barrier and got a 60 pips profit. And obviously it's been going up since then. So yesterday we had one live attempt at the market. So we got a 60 pips profit. And that was the end of the trade for yesterday. So just fill out the spreadsheet. Again, it was a good trading day, not because we made money, but because we stuck to the plan. So because I stuck to my trading plan. And again, you can see the importance of even when we were having losses, especially for those who are new to trading. So you can see when we had the losses, we still said it was a good trading day because we stuck to the plan, because it's sticking to your plan and being disciplined that will get you through trading successfully, not panicking, being patient, controlling your emotions of fear and greed, and being consistent. These are all the qualities that will make you then become successful, and just sticking to the plan. Because you can see is what has got us through this 2 weeks and not wiping out our money and ending up with zero is because of good money management. Basically, the three M's: mind, and mind being controlling your emotions, not being greedy, not being scared, being consistent, sticking to the plan. That's the mind. Money management, obviously, not over trading, limiting your risk. We've always been trading with a stop loss. And the third M is method. We had a trading plan. We're using the pivot point strategy, using the moving average as a guide, and also using the market support and market resistance strategy. So we had a plan. We didn't trade before reports of high importance. We checked the economic calendar. We checked the trends of the market, making sure we were not trading within a sideways trend. So we did what we need to do according to our plan. And that's what has got us through the 2 weeks. So it's sticking to the three M's. Because if you go back to the three M's, because you can see that yesterday was a good example. Because yesterday, if over the 2 weeks, what you will then have realized over the 2 weeks, going back to the stop loss of 20 pips and the profit limit of 60 pips, because you can see when we had these two profitable trades, the 20 pips was sufficient to keep us in the trade in order for us to achieve our profit target, which we did. So when the market did move, we actually got our 60 pips move, and the 20 pips stop loss kept us in the trade in order to achieve our 60 pips profit target. And on the flip side, when the market went against us, we limited our loss to 20 pips, and we didn't lose more than 20 pips because if you remember, when the market went against us in all these trades, they went against us a great deal more than 20 pips. But we limited our loss to 20 pips. We could have lost more than 20 pips, but because we had a stop loss of 20 pips, our losses were always limited to 20 pips. And, all those trades, they went against us, probably 40, 50 pips against us. So our stop loss limited our losses to 20 pips. And when the market moved in our favor, the stop loss was sufficient to keep us in the trade to achieve our profit target. So again, that all comes from discipline. And yesterday was a good example because you can see yesterday, if you were not disciplined, you could have messed up this trade. Because yesterday, when the market took us into the market, you can see it was hovering around the entry point. You can see it got close to the stop loss, but it didn't get to it. Again, so you can see the stop loss kept us in the trade when it was hovering. And again, you can see here, when the market got to that point, it didn't get to the halfway mark. So if you have been tempted to jump out prematurely because you saw it falling back down and you had jumped out prematurely or moved your stop loss prematurely, you would have been taken out of the trade and you would not have achieved the 60 pips. In fact, I'm going to save this chart because people always ask that question about, jumping out early. And I'm always telling them, it's best to just stick to the plan. And this is a good example of why you shouldn't jump out too early. Because if your market had gone to that point, it didn't get to the 30 pips mark, and it started to fall, and you panicked and you moved your stop to the opening level, it would have taken you out. Yes, you might not have lost any money by moving your stop quickly, but you would have lost out on a potentially profitable trade. So you can see it's all about sticking to the plan. Waiting till it got to the 30 pips mark before you move your stop to the opening level. And again, in fact, yesterday was just a very good example of sticking to the plan, because you can see here it got as close to the 60 pips point, but it didn't actually get to the 60 pips point, and it came back down. So again, when you saw it coming down, again, you could have panicked and then jumped out and maybe just taken 30 pips. And then you can see how it went back up and then you'd have missed out. So instead of making 60 pips, you might have already made 30 pips. So you can see why the market can just trick you, it can mess you up, it can make you change your plan. But if you have the discipline and you trust your plan and you don't let the market push you to doing things you won't want to do, that's when you then become successful as a trader. It's just sticking to your own plan. Yeah, things don't work out the way you want it to do every day, as you've seen over the 2 weeks. Things have not gone our way most of the time, but we did not change the plan. Well, I did not change the plan because we've had days where we've lost money. We've had days where the market was just going sideways. We moved our stop, it came back out, took us out, but we didn't change the plan. So I did not change the plan. I just stuck to the plan despite what was been happening all week. We just had a plan and stuck to it. And again, yesterday was a very good example of all that. Not moving our stop loss prematurely, that was one lesson, and not jumping out and taking our profit prematurely. It's all about sticking to the plan, and that's why it's very important to mark yourself at the end of the trading day that it's only a good trading day if you stick to your plan. So even if you made a lot of money that day, but you made money breaking the rules or not sticking to your plan, then that's a bad trading day. Even if you lost a lot of money on that day, but you lost a lot of money sticking to your plan, that's a good trading day. So the key is to stick to your plan, because by sticking to your plan, you find you don't miss out on potentially good trades because of how the market works. So you can see the market is not like a textbook. It doesn't follow any defined pattern. But you just have to have a plan and stick to what you decide to do in the markets. Okay, so that's just get rid of all that. So that's just to, what line is that? Okay, so that's just to remind you all that, especially since this is the last day of the 2 weeks, just to remind everybody the importance of sticking to the plan, the importance of not changing your plan mid trade, and also I almost forgot. I'll be traveling to Rwanda this morning, so obviously I'll be in the air at 12 o'clock, so we'll not be meeting at 12. And I don't arrive in Rwanda till about 4 p.m. or 4:30 p.m. this afternoon, so we'll not be able to meet till this evening. So after this morning's session, I will not be available till this evening. So that's another reason why I'm highlighting all these points of trading, because after this session, the next session and the last session we'll be having is at 8 o'clock this evening. So let's go to today. So we finished that. So fill out your spreadsheet, and we finished from yesterday. So let's go to today. So we'll start with the economic calendar today. So today is Friday, the 21st of August, last trading day of the week. Again, market we're looking at is the Euro US dollar. And we can see here at 1:30 we have the Canadian Consumer Price Index. Obviously, that will have a huge impact on currencies paired with the Canadian dollar. And then at 2:45, we have the Manufacturing Purchasers Managers Index from the US. So that's another report of high importance from the US at 2:45. And as usual, reports from the US affect all markets. And obviously, it will definitely affect the market we are trading, which is the Euro US dollar. So again, there's a high probability of the market trending sideways prior to 2:45. So we want to keep out of the markets till 2:45. And as we can see, the market is, although it's been trending sideways in a haphazard way, you can see it's broken the first resistance already. So we can't use that The only potential point that you could trade come 245 will be to sell below the pivot point. Obviously, from a buy point of view, the first resistance has been breached already. You can't use the second resistance to trade using the pivot point strategy. So the only other available place to trade would be the pivot point to sell. And obviously that's below the moving average at the moment. But like I said earlier, unfortunately we will not be able to meet this afternoon around the time of the report because I'll be in transit from Lagos to Kigali. But I'm sure you all know what to do by now anyway, so I'm sure you'll be able to decide what to do come 2:45. So that's the plan for today, or I hope you know what the plan for today is. Excuse me. I guess after the 2 weeks, even those who are new to trading should know what to do by now, especially since you're going to be on your own from next week, Monday. Obviously, I'm still available for questions via emails. You can either email me with your questions or there's also the Twitter. And obviously, we're still going to have the Tuesday sessions where you can ask questions. Okay, any questions? If you have any questions, do click the hand button or send your questions through to the question box. Any questions before we go for breakfast and before I go and pack for my trip? No questions, good. So I wish you all a good day. Have a great day, and I shall speak to you from Rwanda this evening. So take care and look after your trades, and God bless.